Hi, I'm Kerry Southorn of Affirmative Financial. Thanks for stopping by today. You know, I often get the question, what type of life insurance should I buy? And there are three main varieties, and we're going to have a look at them in a minute, but really it's important to ask yourself, how long do I need the coverage for? Secondly, what can I budget toward it? And the big one, number three, is what are my needs anyway? And maybe we can help you arrive at that. Well, to give us some assistance in illustrating the difference between these three types of coverage, we're going to use some of my artwork. Totally worthless today, but after I'm gone, it'll likely be well sought after, who knows. Way down here, the most economical type at the beginning is what we call term insurance. Now, term insurance is like renting. It's a pay-as-you-go proposition. So, as your risk increases as you get older, the premiums are going to go up and up at renewal time. Usually in 10-year increments, but there's also a 20-year term and so on. And some of these increases as you get into your 50s and 60s can be very significant, let me tell you. There's also a stop date to term insurance, and thus the name term. It doesn't last forever. Usually age 75 or 80, and then it's done. Up here is a product that's been around a long, long time that's called Whole Life. Now, Whole Life has a far higher premium commitment at the beginning than term insurance, but it usually is level cost and it lasts for a lifetime, thus the name Whole Life. The other thing to keep in mind is there's normally an increasing cash reserve that grows on a tax-favored basis inside the policy that can be used maybe for collateral, or if you cash out the policy, you can take the surrender value down the road. So that's Whole Life. Over the last 35, 40 years, a popular option is what we call Universal Life. Now, it's usually level cost, lifetime coverage, just like the Whole Life, but it's popular because the cash values have been stripped out. So you can get started on a Universal Life on a much lower premium commitment level. Now, if you want to put more money in, you can deposit anywhere between a minimum and a maximum. And that difference that you put away will grow on a tax-sheltered basis. And the nice thing is, when it's paid out as a death claim, the insurance plus the accumulations are paid out to the beneficiary tax-free. So there you have it, the three main varieties of life insurance: term, universal life, and whole life.